Go ahead, Lisa.
Hi there, everyone. Good morning. We are here with Susan Woolfe from the team of Income for Life, and she is going to tell us about long-term care insurance and how it can work for you. She also has some other tips and tools that she uses when families are looking at perhaps maximizing their income at home, or perhaps maybe moving to an independent living or assisted living or memory care community. Susan and I have been doing presentations in and around the villages for a couple years, and she's one of the smartest ladies I know, so I'm excited to hear what you have to share with us today. Again, for all of you who've been tuning in, my name is Lisa Honka, and I have a company called Your Key to Senior Living Options, and I'll tell you a little bit about me later, but I'm so excited to have you here, Susan, and why don't you take it away? We have a lot to learn today.
Thanks, Lisa. I'm glad to take some time off from my beach vacation to be with you all. And I want to start by giving you a little quote that I love from Albert Einstein. And Albert Einstein said that, first I better ask, are there any men in the audience? I don't think so, so I'm safe, right? When you sit with a nice girl for 2 hours, it seems like 2 minutes, right? But when you sit on a hot stove for 2 minutes, it seems like 2 hours, and that's what he calls relativity. Now, I'm hoping that I can divulge some interesting information to you all so you feel like you're not sitting on a hot stove. So that said, let's jump right in. And I'm going to breeze through some of these slides because this is a booklet you can get for free from the National Association of Insurance Commissioners, and we'll go into that at the end. It's a shopper's guide, and it's generically done, so it goes with any long-term care information you could need. So, very simply stated, it's the services that take care of and assist people that can't take care of themselves. And what does it cost? Well, I'll tell you, on a personal note, you can look at these numbers, and these are numbers from last year. However, I can tell you my mother-in-law is currently in assisted living, and it's costing over $4,500 a month. So depending upon what type of facility, is it a Volkswagen or is it a Cadillac or something in between, the cost, everything you're going to see here, the cost is a little bit more than that, or a lot more, depending. So, of course, the source of caregiving in this country is primarily family and friends. And that puts a great strain on a family, or friends for that matter. Usually it is daughters, granddaughters, sons, etc. But when that caregiver is working, then they're having to balance the work and the caregiving. And, this is tough when you're in a job, because over 6 in 10 had to make work accommodations due to the demands of caregiving. Now, I have a very good friend who has been caring for her 94-year-old mother for 8 years. She was a teacher. She had to quit teaching. She had a 25-year career, but she really was not ready to retire, but that's what she had to do, and she is still doing it. Of course, there's lost wages when this happens, and this is, again, a number that's a year old, so I'm sure it's a bit higher now. If this person forgoes their lost salary to be a caregiver, they're going to lose over $304,000 of income that they would have made had they not have to be the caregiver. Caregivers who work are also more likely than non-caregivers to have health challenges. They are not as healthy as they could have been because they are constantly under stress. And almost 42% of US workers have provided elder care in the past 5 years. I can tell you many stories about people I have personally talked with or know that have given care in very stressful circumstances and very prolonged circumstances. The cost, of course, is horrendous. Americans spend $48 billion on long-term care expenses for themselves or family members. It's estimated by 2050, it'll be more like 135 billion. Caregiving shortage, we can see it. We can see it now. In 2010, 7.2 potential family caregivers to persons age 80 plus. By 2030, it will fall to 4 to 1. There's a shortage now, as you probably have seen. So how much does it cost? Well, as I said, my mother-in-law is in an assisted living facility. It's in Fernandina Beach, north of Jacksonville, so it is in Florida, and it's $4,500 a month. Now, back in 2010, the national average for a semi-private room was $3,293 per month. Here they're showing the average is $4,000 from last year, but of course we're taking that as a national average. If you were to get long-term care in, say, Hawaii, where I'm at right now, or so I'd like to believe, or Alaska, you're going to pay a lot more than that. It's much more costly in those states. So some are a bit lower than what we have here in Florida, some are higher. Now, nursing home. I can talk personally about this. My husband's uncle is in a nursing home in Fernandina Beach. His aunt is in assisted living. She has lived in that assisted living facility for going on 18 years. And she loves it. She has a mental condition and some health issues, but she is ambulatory, and she has lived there for almost 18 years. Her brother, who is 91, is in the nursing home. He fell, broke his hip, decided afterwards that he did not want to go through the rehab. He'd rather have people wait on him hand and foot, and he actually enjoys himself there. They have legal gambling every Thursday, horse races, and a lot of things. So you may feel like you want to stay away from nursing homes, or some people are very concerned. They don't want to be in a nursing home. But sometimes it's the best place to be. And sometimes it's just, you can have fun there, believe it or not. I've seen it happen. So there's some costs for that, which again are over a year old. The nursing home costs are rising just like everything else. Currently, it's increasing by about 4.5% annually. So the projection for 2030 is $146,000 a year. I think that's probably a little bit low. So who's going to pay for all this care? You know, when the conversations about long-term care come to families, it's usually far too late. And when do you think people call me to talk about long-term care? I'll tell you when. A lot of times it's when they already need it. So I can't be of much assistance there. If you plan for the worst and hope for the best, then more than likely you're going to be prepared. And I do the best I can to help people with resources in that situation, resources such as Lisa, but it becomes very difficult when people have done no planning at an earlier stage in their life. So, we do, health insurance does not pay for long-term care. There are a lot of misconceptions out there. Medicare doesn't pay for long-term care. And Medicaid is only very specific circumstances, and you really wouldn't want to go there if you didn't have to. Oops. Okay, so a lot of times people will say, well, I have a friend who is, their Medicare is paying for their long-term care right now, and it's just fine. Well, there are very limited services that may or may not qualify for a short period of time. If you don't want to be limited and you want to have power and control no matter what as to who gives services or where you go for the services such as assisted living, then you don't want to go the Medicaid route and spend down your income and assets in order to maybe qualify. It's not a pleasant procedure. So people are paying for it sometimes with their personal resources, their income and assets. I can also tell you my parents had long-term care. They both passed away in 2014. But before that, I had my mother in assisted living and my dad in a nursing home on the same campus in Miami. It's called the Palace, and the prices were palace prices, let me tell you. And even though my mother was in a facility that was independent living next to the assisted living, she refused to go into assisted living, so I had to get her a 24/7 caregiver to stay with her in her apartment, and they charged an additional $400 a month for medication management. So back in 2013 and 2014, I paid the bills, so I can personally attest to the fact that it was costing just over $12,000 a month for my parents' care. Now, fortunately, I was able to get my mother long-term care many years before that. My dad could never qualify, so that was helpful. But the money was going out of the accounts like Niagara Falls, and that's the way it goes. So you want to have power and control. You want to be able to say, I'm covered, whether it's through personal resources in some type of long-term care coverage or a combination. So again, you know, supplemental insurance, which many people purchase when they become Medicare eligible, which is wonderful because you have access to the doctors of your choice, but it is not meant to be, nor is it long-term care insurance. So again, like I said earlier, some people will say, well, I have a friend who's, you know, using theirs right now. It's very short-term, very limited. Medicaid, of course, is government funded, and many people never qualify. It's a big process and don't want to go there. So, you know, it is hard to know if and when you'll need long-term care, but here are some statistics. Life expectancy currently after age 65 is just over 18, well, let's just say 18 and a half years. About 70% of people who reach 65 are expected to need some form of long-term care at least once in their lives. And I can tell you to remember this, the number 70, 70, 70. 70% of 70-year-olds, and there are over 70 million of them right now, are going to need long-term care. So you can change those things around, but it's 70, 70, 70. 70 million 70-year-olds and older, 70% of them will need long-term care at some point. So, you know, look at the bottom figure. People age 85 and above, that number is going to almost triple by 2055. And they say that 80 is the new middle age, so I don't doubt it. So when you plan for long-term care, you know, look at the figures. This is just, we have a lot of redundancy in this slide presentation because it's kind of helping those who never thought this way to let these numbers sink in, because the numbers are huge. So of course, long-term care insurance is one way to pay for long-term care services. It's also the least expensive way to pay. Sometimes people say to me, why would a millionaire want to buy long-term care insurance? They've got plenty of money to cover themselves, right? Well, it's a good business decision for those people, because when you buy long-term care insurance, you're actually paying pennies on the dollar for the coverage, for the services that you are provided with a good long-term care policy. Now, tax qualified policies came into play when the states have done this. In the beginning, it was just a few states, and then over time, more and more states were getting the long-term care as tax qualified, and they want to encourage people to have long-term care. They don't want to make it something that is hurting you tax-wise. Do you need to buy this type of insurance? Well, not everybody does. Not everybody can. But it depends on, of course, your age. Are you healthy enough to get it? Your overall retirement income and assets. And the companies want to know that, do you have enough income and assets to cover should the premiums go up in the future by 20, 30%? Now, some of the long-term care you can get, that's not even an issue. It's never going to go up. But some of it, and you may have heard of people saying, there was a company not too long ago, their premiums went up 98%, which is horrific. But you had the choice to either take a lower benefit to bring your premium down, or cash it out for the number of premiums that you had paid in over the years, or just suck it up and pay that higher premium. So that is something that has to be considered. Well, who shouldn't buy long-term care? Of course, people with low income and assets, they're not going to qualify. They're not going to be able to afford to buy it in the first place. Or if they're borderline and they really, we've had to tell people, you know what, this is not a good idea for you because it's going to be such a big bill through time, and you're pinching pennies already. We don't recommend it. And the questions that the company provides, they wouldn't recommend it either. So you have to get a little more creative in those situations. Now, you can buy individual policies from insurance companies, and I have a caveat that literally I just got yesterday regarding how they underwrite long-term care, and I'm going to tell you about that. Because there are a number of companies. There used to be over 130 companies selling long-term care, and now there's only a handful. So you want to be sure that you're working with a very good company that has a great reputation. And what they're doing now, and I can give you the names, some of these companies that are called traditional carriers, and I have to look at my printout here, Mutual of Omaha, National Guardian Life, Thrivent, Transamerica, they're saying that, you know, what happens when they're underwriting a family that has, or a family member that the family history has dementia in it. And this has been a concern for a long time. But the underwriters have said, for instance, from Mutual of Omaha, it's an automatic decline if two relatives have dementia. They will consider the individual for coverage if it's only one relative. This is brand new. National Guardian Life, one parent or sibling would be okay to submit, no underwriting restrictions. Both parents or one parent and a sibling is uninsurable. So it has nothing to do with that individual's health today. It's about genetics, really. And then Thrivent underwrites long-term care based on the applicant's personal health history, with the exception of early onset Alzheimer's dementia. So both parents diagnosed with Alzheimer's dementia prior to age 65, or death from AD prior to age 70, or a parent plus one additional close relative, such as a sibling or an aunt, uncle, or grandparent on the side of the affected parent with early onset AD. So they have a lot more. They say at age equal to or less than 59, whether or not this member showed any symptoms of a cognitive disorder. If both parents were either diagnosed with Alzheimer's dementia prior to age 65 or died from it prior to age 70, the member will be ineligible to apply for coverage. Now, you can get several types of long-term care out there. Most people, when they think of it, they think of the traditional, where you pay a monthly or a semi-annual or an annual premium for the coverage. But you can get what's called a hybrid, which means life insurance and long-term care is packaged together, so that if you're a person who says, you know what, I may never need this, I don't want to put money into this month in and month out, year in and year out, and I may never need it or use it, and that money just goes to waste. Well, I could argue that if you own a home, how long have you paid for homeowners insurance and not had a claim? Maybe 30, 40 years, and you've yet to have a claim, and nobody wants to have a claim. But that's a lot of money you've put into that, just, you know, in case you may need it. With life insurance packaged with the long-term care, the money is not lost. The insurance is there. If you never need it, we all die someday. When the individual dies, the money goes tax-free to the beneficiaries that they choose. So it's going to get used by someone you care about if you don't have it yourself as a regular long-term care situation. Or if you use some of it, but not all of it, the remainder goes to your beneficiaries. In other words, bottom line, the money is not lost. Same thing with annuity policies. Sometimes people cannot qualify for the life insurance, but they have $100,000 or more that they can put into an annuity. And a lot of annuities these days have riders that pay for long-term care expenses. Now, I will go back to the life insurance for a minute, because what makes it so hugely popular now is something that's a little newer, and that is if a person goes on claim, or if they have a spouse, and one or the other or both go on claim, the long-term care coverage can never run out. And I have to repeat that. Maybe they put $100,000 into this policy, and it was giving them the life insurance and the coverage amount that they wanted as the monthly amount. If both husband and wife are on claim, they each get the same amount. So it may be paying out as much as $12,000 or even more per month if both are on claim. But as long as they're on claim for long-term care, even if it's 20 years, the company is on the hook to keep paying. Now, by doing that, they're ultimately going to run the dollar figure in the policy out so that there would be no death benefit left for heirs or their beneficiaries. But the point is, they can have their long-term care without fear of it running out and then them still needing it. So obviously that is a huge, huge benefit. And I'm thinking of my husband's aunt who has needed assisted living now for almost 18 years. So, you know, it depends on your budget. It depends on your situation, which one would be most appropriate. Now, comprehensive tax qualified policies are going to reimburse for anything listed here, whether it be adult daycare, home health care, assisted living, or some combination of these. They're all covered. And the partnership program, which I'll tell you a little bit more about later, is just the government wanted people to start being motivated. If they could afford to get some long-term care coverage, they could at least stave off the road to Medicaid, and they could be rewarded for that. They would have to have compound inflation protection if they were under 61, so the policy hopefully keeps up with inflation, which you should have anyway. But they didn't want people to lose their assets like they normally would if they did at least make the effort and get some form of long-term care if they could. So, you know, you're going to choose, you have the choices of a daily or a monthly benefit for a specific number of years with the traditional long-term care. And the inflation protection, unless you're already in your late 70s up to age 80, that would not be necessary. But if you're in a younger age category, say 55, 65, then you're going to want to have at least simple interest. If you're younger, you want it to compound the benefit yearly to keep up with inflation. So, you know, a lot of people here are concerned about long-term care, but only 14% actually own the insurance to protect them. So you can, as I said before, get a joint policy, and it could be with another family member, not necessarily a spouse, but we call that the bucket of money. So if the bucket of money in a policy is $250,000, both parties have access to that bucket at the same time or individually. And it can be engineered differently based on the type of plan. But in traditional policies, because the traditional kind no longer has lifetime unlimited, but as I mentioned, the life insurance does have unlimited coverage for the long-term care. So the other type, you can actually run out of the money in the bucket. So that's something to consider as well. So again, all of these services are covered. A lot of times people think, you know, what if somebody goes into a nursing home, recovers, then they get into assisted living, then they get to go home, but they still need some home health care. Then they're also using adult daycare. Then they have to go back in the hospital, you know, come out and go into a nursing home. This happened to my dad numerous times, in and out of the hospital, the nursing home, and as he recovered, he'd go back into assisted living. All of these things are in fact covered. Back 30, 40, even 50 years ago, the policies that existed were nursing home only. They have really evolved tremendously to cover all these things over the years. So you want to look at your policy. You know, if you have a policy and you're not sure what's covered, just go to the exclusions and limitations page in the policy or the contract. It's going to show you what they do not cover. And this is standard, what you see on this page. Why do people buy the long-term care? Well, in my experience, it's usually because they get to thinking after a family member that they've cared for, or they have a neighbor or a friend has experienced life without a long-term care policy, and they see what a stressful thing it is. So they also want to avoid going to a nursing home and have care at home if that's, you know, where they really want to be. And they really don't want to risk spending all their assets they've worked for over a lifetime just to see it fly out the window paying for long-term care. So again, as before, we mentioned a daily or a monthly benefit. There are some policies, I'll just touch on this because we've already talked about it, that have a cash benefit that will give the cash for the month. You know, let's say they bought a policy that pays $3,000 a month. They can get that in cash and use it to pay whatever they want. So if they have someone coming into the home, they get the cash, they pay them. Maybe they're only coming in 3 days a week to start. That's all they need. But as time goes on, it progresses and they need more help until it becomes full time. But they have the money, they can pay, you know, to go see a movie. Nobody's going to tell them they can't use the money for whatever they choose. So, benefit triggers. When does the policy start working and paying the money? There are 6 triggers known as the activities of daily living, or ADLs, which are bathing, dressing, eating, continence, toileting, and transferring. So if you're transferring to get from a bed to a chair or vice versa, you know, and you need help with at least 2 of these. Some companies say 3, but that's very rare. Usually you only need to have assistance with 2 of these. What could help you pay for long-term care? Well, if you're healthy, active, and still working, then you should be considering long-term care insurance. Some people do what's called a retirement community buy-in, and they're going to buy a home in there. And when they do that, if they should need to move into assisted living in the future, or ultimately a nursing home, that's all going to be covered within the community based on what they paid up front. And then there's personal income and savings. So then we have the annuities that we discussed. Home equity, sometimes people will do a reverse mortgage if that fits the bill for them, and that can give them enough extra money potentially to bridge that gap. Or a trust, or a life settlement. Now, a life settlement is when somebody has a life insurance policy that they no longer need or can afford, and they would like to try to sell it to a third-party investor group. A lot of people tend to think, I do a class on this in Ocala just about every semester, and they say, oh, but that doesn't include term insurance, right? That is incorrect. It can include term insurance. I've had several settlements paid out to folks who had term insurance that the premium was going to skyrocket and they could no longer afford it as retirees. But they had a lot of health issues, and an investor group was willing to pay them to buy that policy from them. So it's always worth checking if that's a possibility. It costs nothing to find out if there's money there that is your money. So if you're in poor health, then of course, hopefully you have personal income and savings or home equity or both. And then selling of life insurance. Sometimes life insurance policies, most of the newer policies have a feature called accelerated death benefit. And you can't accelerate 100% of the death benefit, but maybe up to 75% you can take before death. And so the remainder, the small remainder, would go to your beneficiaries, but it could help. And the history on that is when AIDS came on the scene in the 80s and people really didn't know what was causing this illness. And people were sick for a long time sometimes before they passed on. This was a way, the companies that first came out with it said, this is a way to help them live with dignity and get care that they need now, and then just greatly reduce the death benefit. So if you happen to be concerned about protecting assets, your best options are what's listed here that we've talked about. And if you want to look at risk management and look at your strategy for an actual long-term care event, which in the case of my mother-in-law, the long-term care event, at the age of 93, she had a series of small strokes, found out her carotid artery was 100% blocked, had to have surgery, got out and had to rehab in the assisted living, and the family really wanted her to stay there for her own safety. So the strategy now is they're selling her home to continue to pay for this care because she needs to live there. So, if you have life and disability insurance, you must have auto insurance if you're driving. If you own a home, you probably, of course, have homeowners insurance, health insurance, everything that you see here. But when it comes to long-term care, that is the greatest unfunded liability today in the United States. And, people are extremely concerned about long-term care and the expenses. But, even with that 70, 70, 70 I told you about, as we said earlier, only 14% of people are covered with a long-term care plan. So these slides that you've been seeing and reading are rather redundant for a reason. I planned it that way because we only retain a few things, a few tidbits when we see programs like this. And there are some things with long-term care awareness that you need to be not be remembering what the urban myth is, so to speak, but know some of the facts. Of course, health insurance, we said, and disability insurance do not cover long-term care costs. Medicaid may pay for specific services based on income and the other qualifications. Here are the numbers. They're not good. There's going to be an increase. And as I said, the companies are looking at that and reacting to that when it comes to Alzheimer's. It's going to make it harder or impossible for a lot of people to get long-term care because of this. I'm sorry to say that. But, if you have an accident or a chronic illness that causes a disability, let's say you're 18 years old. Nobody talks about an 18-year-old or a 20-year-old needing long-term care. But if you visit some nursing homes, you'll find people of that age group in wheelchairs who need long-term care because of a terrible automobile accident or some other health situation. So it's not just being over the age of 55 or 65, which is when people commonly look to buy long-term care of one kind or another. But anybody could possibly be in need of long-term care at some point in their life. So as you can see, chronic conditions like these make you more susceptible to needing some form of care. Poor diet and exercise increases your possible need. Here again are the most cost-effective ways to cover for these things. And the ones at the bottom are the ones that you want to try to avoid, even though Aid and attendance is really a blessing for people who can qualify sometimes. The qualifications are very specific. Not all people do qualify, even if they served in the military. So if you like power and control, like I said earlier, the top 3 are what you should learn more about. Now we have a little time for Q&A. I was trying to leave plenty of time in case you have questions, but I just wanted to share one more thing. I don't know if you can see this, but I'm going to read it to you, because if you do, you're probably looking at it backwards, right? This was from an article back in November 2015, and it says, world's first anti-aging drug could see humans living to the age of 120. Now, you may think that's pretty hilarious. However, in the world of permanent life insurance, the policies go to age 120. Back 30 plus years ago, when I got into this arena of insurance, life insurance policies only went to age 95 or 100, and then they just gave you the check. Now, if you're living still at age 120, at the end of that year, when you turn 121, they will just give you the check because you've lived your whole life. So people laugh about this, but I think it was, who was that famous movie star that just passed away at 104? She sure didn't look like she was 104. I'm having a senior moment. Who was it?
Olivia de Havilland.
Yes, that's right. That's right. And so many of the people that we have seen and known through movies and television are over the age of 100 or very close, like Betty White. And so it's really true. It's not a joke. And of course, the older we get and the longer we live, but we're more likely to need some of this type of care. So what questions do you have for me, if any? And if I don't know, I'll tell you I don't know, but if I do, I'll give you a quick answer.
Hi, Susan. It's Lisa again. I have a question from the audience. Why doesn't long-term care insurance pay for a family member to care for a loved one as they do home care for them? Aren't they better off having a family member care for them? And family members sometimes have to quit their jobs, as you mentioned. So why doesn't a long-term care policy pay for someone to care for someone in their home, like an adult child, have their parent come in, or they go to their parent's home to care for their loved one, or a spouse? Why is it that long-term care doesn't pay for that?
Well, some actually do. There's a lot of times there's a sentence or a paragraph or two in the policy that says that if the person is trained, then, well, let me give you a best example that I know of. And that is, I mentioned earlier, the policies that give a cash benefit. Now, they do cost more. If you get a cash benefit that just pays you upfront $3,000 a month, for example, you can choose any way you want to spend that money. So if you have a family member coming in to care for you, you can pay them with that money. So that is not always the case, although I think the reason a lot of policies have that in there is they really want to be sure that the person is getting care from people who are qualified, who know how to do things correctly without hurting themselves or the person who's needing the care.
And I can add a little bit to that. I do know that in some cases, some of the home care agents actually allow you to be hired. So let's say it's a granddaughter or a daughter of, let's say, a grandparent, and they actually are hired by that person, by that company, in order to care for their grandparent or loved one. So it actually can be that they're an employee of a home care agency, and the money actually funnels through the agency and then back to that person. So I've seen that happen before.
Right.
I have another question. Can you hear me okay, Susan?
Yes, I just wanted to say, usually what you were describing, we're talking about custodial care,
Hmm.
not skilled nursing. And
Correct.
that's what a lot of people, when they think of this kind of care, if they're not really familiar with what's out there in the world of long-term care, most of the time, at least in the beginning, it's custodial care that people need. If they're progressing, with an illness or some type of progressive disease where maybe they only need help 2 days a week, 3 days a week, shopping, cooking, cleaning, and the like, that's custodial care. But when they start needing skilled care, that has to be from a nurse or a physician or combinations. And, that's a whole different bailiwick. So go
Right,
ahead.
that's a totally different dollar rate, and it has to be by a licensed facility who is submitting the care plan on a monthly basis for reimbursement. So a little bit different for sure, but I have seen it where people are hired by the home care agency to do, as you mentioned, just companion care in the home. Okay, so I have another question here. Um, do policies always come with an inflationary protection?
Not necessarily. If the person is younger, then they usually, the traditional policies, you have to have some form of inflation protection. It can be either simple interest inflation protection or compound. And if you're on the younger side, you really need to have the compound interest to keep up with rising costs. Because if you are 50 and you're not going to need care until, say, age 80, prices are going up, and they have been, and they're going to continue to go up as we're seeing. So you have to have that so that it's still a viable product. And the original nursing home products, I've had clients that have had to layer, maybe they bought a nursing home only. Um, they have bought it back 40 years ago. And of course, that's not going to cover assisted living at all. So they have to layer it and buy a newer type policy to cover for the assisted living, or to also boost up the nursing home coverage, which back in the old days didn't have inflation protection.
And who buys more long-term care insurance, men or women?
Well, I don't have a statistic on who buys it more, but women need it more statistically. Women are 3 times more likely to need the long-term care. And when you go into facilities, you'll see, as I'm sure you know, there's usually way more women than men. And of course, the men can have a really good time with that. My husband's uncle was crowned king in his nursing home, and the woman was gripping his hand with a big smile on her face, and he had the look of death on his face. So they were side by side in wheelchairs, and he's a man who's never married. He was a shrimper. The Italian men of the family, they came over from Italy and started the shrimping business in Fernandina Beach with other families of Greek and Italian origin. And he was out on the boat going, to Louisiana and Texas and back, and all 5 brothers never married. So
Wow.
I don't know any more than that. I'm sure there's some good dirt in there about the whole thing. But the men, if they go in, they usually spend less time before they pass on if they're in a nursing home. But us women, the men will say, and this is a little crass, but I've heard it so many times, they'll say, I don't need long-term care, I'm just going to shoot myself.
Mm.
And I have to say, well, if you suffered, say a stroke, and you're not physically able to shoot yourself, what then? You really need the coverage, to not only for yourself, but for your family's sake. You need the coverage. I've had many, many people over the years, men and women, say, well, we talked about it, my kids are going to take care of me. Well, are your kids trained professionals? Do you expect them to quit their jobs so they can take care of you? They didn't think about that, or they don't want to talk about it. Because yes, children love their parents, and they're gonna a lot of times say, don't worry, mom or dad, we're gonna take care of you. Now, I did meet a woman who both parents were getting frail and had some dementia. They sold their home up north, quit their jobs, bought an RV, came down to Florida, parked that RV in the driveway, and lived in the RV and went into the house every day to take care of their parents. I've only met one person who's told me a story like that, but they also said they really sacrificed a lot. They were in high-paying jobs. They, they left a good situation that was boosting their retirement for the future to take care of mom and dad. So people do that, and I know others, like I said, a friend who's taken care of her 94-year-old mother for 8 years now. And it's a sad situation for her. She has no life. And as her mother gets more and more dementia, she's more and more demanding. She's very mean, and it's very gut-wrenching when someone you love is mean. You know they don't mean it. I mean, it's not really them that's being mean. It's the dementia talking or some other illness. But it's still hard to take. It's still hard to take. So it's a blessing if you do this for your family and friends.
Susan, we have another question from Lucille. Lucille, do you want to unmute your mic, please, and then go ahead and ask your question?
Okay. I have a question and also a comment about fewer men in long-term care facilities. Part of the reason why we have fewer men in long-term care facilities is that they depend on the spouse to take care of them. And that doesn't always work the other way around.
Yes,
so
that's a very good point.
Yeah, that's just a comment. My question is about life settlement. If the long-term care policy that we've had, ours just went up significantly. And we've had it for, I think, 15 years. If it got to the point where we could no longer afford the increased premium, how does one find a buyer for it? What is the process like for that?
Well, we send it to a company. We have several companies. There are actually, there's another way that I didn't mention that fits into that category nonetheless. I ask the preliminary questions because I know if it's a good candidate policy that they would be interested in. And most companies want the face amount of the policy or the death benefit to be $200,000 or more. In other words, they won't look at a $10,000 or a $50,000 or even a $100,000 policy anymore. They also like it if it is term insurance, if it has a conversion feature that's still active, that they can convert it to a permanent policy, because they're investors and they're looking at the person's age and health today. Someone I'm working with right now, for example, he's in his 70s. It's a term policy, but he's rather ill. He's obese and has diabetes and has a heart condition. You know, a whole menu of things are going on with him health-wise. And he says, I'm retired and the premium is going to go up dramatically in the next few years. I cannot pay for that in the future. So what will they offer me? So we put it out to all of the investor groups to see if there's an interested party. And this can take months. When the information goes in, they hold it for a year. I have had people who there were no offers on their policy until 4 or 6 months later. And then there could be multiple offers, and then they get to, of course, pick the very best one that is being offered. But sometimes there is no offer, but there's no cost to try. So I'm kind of the filter in that, you know, I look to see what it is, what's going on with the person health-wise, because if the person is very ill, there's something called a viatical settlement, and that means that they're, you know, maybe they don't have an accelerated death benefit in this policy and they need money now to help them live comfortably. So that's where a viatical settlement could come into play and be the salvation for the person, you know, and financially. But most of them are life settlements where people have a term policy or a permanent policy that they can no longer afford, and they want to see if somebody will pay them to take over ownership of that policy, which of course means the life settlement or viatical settlement company ultimately is paid the tax-free death benefit directly from the insurance company. And I will say, insurance companies don't like this. The truth is, insurance companies, some, I don't name names, but some have actually tried to block these transactions because they know that, well, I'm going to back up and give you a statistic. 99.1% of the time, term policies do not pay a death benefit because the individual insured outlived the term. So they may have paid premiums for 30 or even 40 years, and then they can no longer afford it because it's going up dramatically. But what happens, as I said, if a life settlement company can buy the policy and it has a conversion feature in there, they like that because that sets the premium at a permanent rate, and they can do their actuarial numbers to see if that's going to be beneficial to them in the short term or the long term. But to answer your question a little bit better, these policies, when the insurance carrier or company sees that a life settlement company is in the process of buying the policy, they have to send paperwork. The viatical life settlement company has to send the paperwork to the company saying, here's the paperwork that says we're becoming the owner of this policy and the beneficiary. And they'll stall and they'll block and say the paperwork wasn't received. And there have been lawsuits about this because legally they're not allowed to do that. But the other thing, the thing that probably irritates me more than that is when companies tell their financial advisors that they forbid them to tell their clients that this even exists as a possible solution to their problem. And I have talked to financial advisors in the villages and first of all asked them, are they familiar with life and viatical settlements? Some have heard of it, some are familiar, some just aren't familiar at all. Others have told me point blank, our company does not allow us to do that. So I feel that it's a fiduciary responsibility to put that on the table if it's something that could help the client, you know, get whatever they need. But unfortunately, there are some people out there that they don't want that to be an option for the person. So I think knowledge is power. If you know that and you get the wrong answer, then you have to keep investigating until you get the right answer because you have the knowledge that it is potentially an option.
Susan, we have another question. Does it cost any money for someone to review a long-term care policy?
It certainly should not. I review policies for people quite often because, and I like to give you examples. You know, I do teach a course at Top of the World. They're a nonprofit, Master the Possibilities. And I think, Lucille, you mentioned your long-term care has gone up in cost significantly. Well, these people were coming to my class, but they had a deadline. They received from their long-term care carrier information that their premium was going to go up 98%, but they had choices. They could either choose to cut the coverage in half and pay that lower premium going forward. They could choose to cash out the policy for just over $30,000, which was the amount of premiums they had paid in over the years. Or they could leave it as is, and they would gradually increase that premium over a 3-year period to, is that what you have? I mean, I know what company you're talking about, but I won't name it. But I never represented them, by the way. What happens is, they call me and they say, can we find out before the class what's going on with our policy, get you to give me a reading on this policy. And they had to see me before the class because the date the policy was going to change, or they had to get their decision in for what change they wanted, was before the date of the class. So I happily, this is something weird about me, I admit it, I really enjoy picking policies apart, page by page. Excuse me. And the interesting thing is, most policies you'll find do not pay benefits if you want them to be paid out of the country. Let's say you want to go live in Mexico because the long-term care facilities over there cost a heck of a lot less than they do here. And excuse me, I have to get some water. These folks had a policy that had an international component, which would allow them to get nursing home care only in another country. I said, wow, is there any way you could afford to keep this policy just as it is, because it is a really good policy, not just for that reason, but for many other reasons. I said, if you can skip going out for that pizza dinner on a Friday night once a month and keep this policy without reducing it or cashing it in, it's a very good policy. And that's what they opted to do, because in fact, one of the spouses was still doing contract work from time to time. You know, so he wasn't 100% retired, but it was an excellent policy that they had, and they had no idea. So it really is important to have a professional look at it, and you should never be charged for someone to do that. I don't know anybody personally who does that. I never have done that. But I would say if someone offers to do it for a fee, keep looking.
Yeah. Lucille, too, if you would be interested in having me look at it, what I can do is give you some prices on what an average cost of an assisted living or home care is, or a long-term care facility or memory care. So you have an idea what your value of your policy is. Let's say, for instance, it's $6,000 a month, and they're thinking if you change the premium, you're going to get $8,000 a month of coverage. Perhaps maybe that's beyond what you would even need. And so I can walk you through the different scenarios of what things would cost for you or for you and your spouse, or in the different levels of care, just so you have an idea of what the average cost here is in the villages. So if anybody is interested in having myself or Susan or both of us look at it, I'd be happy to do that for free. Susan, do you have anything else to add to this? How can they get in touch with you if they wanted to talk to you about any of the things that you've mentioned?
They could call or email me. I think that'll come up on the screen in just a second. I'm here in Citrus County, about 40 minutes from the villages. Before COVID, I was in the villages seeing people every single week. And I will share something with you. Back in 1993, a gentleman who's an attorney decided that there needed to be a resource for people selling long-term care insurance, because he took care of both of his parents through the long-term care journey. And he saw just how harrowing it was on a very personal level. So he came up with a designation, CLTC, for a long-term care professional. I got that designation. He was actually our instructor in Jacksonville. And at the time, I thought, long-term care, that's got to be boring. I'm going to have to hold my eyelids up with toothpicks to stay awake through this training. I was riveted the entire time, because it is so important to know what your options are. Because again, and I got this from an elder law attorney, you plan for the worst, but you hope for the best. If you've done all your planning that you are able to do, then rest assured, take that weight off your shoulders, because you've done everything you can do. But if you haven't, if you've been procrastinating, get the facts. Then, you can do the Ben Franklin, which is, you put the pros and cons on two sides of a page, and then you see which one has the most things to consider. Because this is very personal, and a lot of people, really none of us, don't want to see ourselves needing this type of care. It's always somebody else. It can't be us. And you need to take that out of it and look at it. And that's why I say, normally people who have not been around a long-term care situation with family members or friends, they ignore this as an issue. They don't pay attention until it's really close to home, being their spouse or even themselves, and that's when they want to find coverage, and that's when it's too late. So, you know, knowledge is power. If you need one of these, I said I would mention some things further down the road. You can't see me now, but I actually have the generic shopper's guide to long-term care insurance. If you call me, I'd be glad to send a copy to you. It really covers all the bases generically, so it's not talking about particular companies, it's just talking about what to look for a good long-term care program for yourself.
Well, thank you so much. We really enjoyed your presentation. We've learned a lot. For those of you who don't know me, my name is Lisa Honka, and I have a company called Your Key to Senior Living Options. I help seniors find independent, assisted, or memory care communities free of charge. Also local resources, if anybody is looking for home care or hospice care, or perhaps even chefs that can prepare meals in your home. I'd be happy to give you the resources that I work with. Our next presentation is going to be on August 19th at 10 o'clock. I'm going to be doing the presentation on when is it time to think about assisted living. Again, all of our presentations are on my website, so if you have anybody that's interested in learning about long-term care insurance that Susan just did her presentation on, it will be on our website later today or tomorrow. And any of the past presentations that we've done through TLC will also be there. So if you're interested in sharing them with a friend, I encourage you to send them off to people who could benefit from the knowledge that we're sharing with you. So again, everybody have a great week. I look forward to hearing your questions, comments in the future. I hope you've learned something today. And thank you so much, Susan. You're one of my favorite people and very smart. So thank you for sharing your knowledge with us.
Thank you. I'm sending everyone there a virtual hug. Hope you have a great day.
All right. Take care. Bye-bye.
Bye.
Be well.
Stay safe.
Bye-bye.